Hey guys, it's been a while since I've done a video. Um, no particular reason, just life. Life been getting in the way. But I'm gonna start doing these more consistently. But there's a few things I want to talk about today. First thing I want to talk about is how my trading's been going. The last video I did, I pretty much told you guys that I had an outline plan that to get my size up by the end of the year, and it's actually going as planned, which is really exciting. January, to be honest, guys, was the best January I ever had in my trading career. I've been trading since 2009. Actually, January 2009 is when I first started trading. So that's this past January has been the best January I had in my trading career. And that's due to the volatility and then the experience and all of it just coming together at once. But it's been great. February a little bit has been a little different, and but all in all, my trading's been going well. Trading plan is, as far as getting my size up, is in full effect. I'm a little bit bigger than I was when I first started because I had certain balance requirements I wanted to get to before I start upping my size. But another thing I wanted to talk about, what you guys see here is Friday session, right? And I wanted to talk about market conditions and the current market condition. The volatility is going down a little bit, which you're going to see a little bit more choppiness, obviously. But what's really going on now? You have this pretty decent sized range, and some of you guys may know I mentor a couple of traders, and some of the traders I mentor, they would say, the market moved 30 points as far as range wise, and I would say, but I didn't do pretty good, and I would tell them, like, you can't really pay attention to the range itself. You have to pay attention to whether you're following your trading rules and your plan or not. That's the most important thing. Who cares if the market moves 50 points and you only got 5? If your trading plan, that's what your trading plan allowed you to get that day, then that's what it has to be. So I would just take away the actual range and look at the market conditions. As you can see, Friday was actually kind of choppy in a sense. I mean, look at all these. I always trade off the 1 minute chart. Some of you guys may know, but you can see the market's a little bit choppy, right? It's a little bit choppy. It just chop and then explode, chop and explode. Some nice moves in there, but you had to deal with some chop. And here's what I really want to talk about. Here's what struck, guys. I'm gonna stop my 2016. What I want to do, I want to use more positive language, which I'm a positive guy anyway, but I really want to use positive language going forward. So I'm going to stop saying struggling trader and say developing, because if you're still in this game and you're still trying to achieve if you're trying to go where you want to go, technically you're a developing trader. And if you're a newer trader, I'm just going to call you a rookie trader. There's nothing wrong with being a rookie trader. The only thing that's going to make you not a rookie trader is experience and time, and you can't, you just have to deal with the time. So for now on, I'm going to say developing traders. So here's where I feel like developing traders can really mess themselves up, because the market's a little bit choppy. And you could say, wow, I'm getting whipped out of trades and all this other stuff. And you could start tweaking, messing with your strategy a little bit too much. Now, I'm all for making adjustments, like, with the market volatility and the market. You have to make adjustments. That's just common sense. But this is the time where developing traders can get a little chopped up, and they can say to themselves, oh my God, they could throw their trading plan out the window and start all over. That's not what you should do. If your trading plan is solid and you back tested it, you should know it's solid, and you should make adjustments according to the market conditions. So that's what I really want to talk about. Do not throw your trading plan out the window. You have to make adjustments with market conditions, but don't throw it out the window. That's where you can, all of a sudden, you're trading support and resistance, and the next thing you know, you're trading Fibonacci, and you don't know how you got there, because you threw everything out the window for something you may have been developing for years, and just because of the market conditions force you to do that. Make adjustments, but don't change your whole plan. And another thing I want to talk about is, this was weeks and weeks ago, I had a long talk with my mentor, and my mentor, one question he always asked me, he always say, What are you struggling on that you need to improve on? And that's a deep question, And he said, listen, be honest with yourself, because this is your trading career. This is your goals and your dreams. So it's not mine. So what are you trading? What can you improve on? What are you struggling with? And I told him, I said, what I think I was struggling with is sometimes I hold on to a trend too long. Even though the ES is always a two-way market, meaning you can counter trend and make money and all that. But you know, half of last year and most of this year, I've been doing a lot of trend trading. Before that, I would do a lot. I would do like maybe 60-40, 60% being trend, 40% counter trend last year. I'm beginning of last year, but lately, the last, I say, I don't know, about 8 months, I've been doing a lot of trend trading. So I said, I've been doing a lot of trend trading. He said, so if that's what you're gonna do, what do you need to work on? I said, I just hold on to trends too long, where the market will reverse, and I kind of feel it that it reversing, but I'll still, in the instance, I would still take shorts in the markets. Say the market's a downtrend and it flips to an uptrend, and I'm still taking shorts, even though I'm scalping to make a little bit of money. But I felt like I held on to that trend a little bit longer. So what he told me is, and this is where I feel like this is where simplicity at its finest. He basically said, "What is one of the first things you learned in trading?" I said, "Trend." Well, he said, "What is a trend? Higher highs, lower lows, right?" He said, "That's what a trend is." So I'm gonna show you something, and I'm gonna show you guys something that we all know. It's no secret. It's no voodoo. It's no, holy grail. It's something that we all know, but sometimes the things that you learned when you first start trading, you need a refresher. And this was a refresher, and this really helped me take my trading. Believe it or not, this little simple thing really helped me take my trading to another level. And like I said, and it's going to start with this. This is Friday's market, right? Like I said, what is the definition of a trend? Higher highs, lower lows. That's when you're in an uptrend. But in this case, I don't need to repeat it for the downtrend. So this is the one technique that I added to my trading that really like um helped me not hang on to a trend longer than I should. And when you really think about it, I'm gonna take paraphrase a quote from probably the greatest trader of our time, and show you exactly you know how to trade it in a sense. Okay, so like this is a downtrend, right? Clearly, in the beginning of Friday session, market open went downtrend. Okay, so most of the time I play pullbacks. No secret, no holy grail, no anything. So I'll play pullbacks, right? So I took this trade pretty decent, couple points, um, made some money, scaled out, good trade. But then now this is where I would put my level right here, because why would I say that? This pullback is the origin of this last move. Remember, this is the pivot, you can say, and then it pulled back here. In order for this market to continue to be in a downtrend, you have to what? Higher. You have to hit another low. And where did the origin of this move start? The origin of this move start here. So boom. So from there to there, so this is where traders get in trouble who trade support and resistance. And so you guys know this is going to be a two-part video. So, and see, a lot of traders trade support resistance. They may have a level here, and they will wait, right? They will wait and say, okay, I'll wait till the level get here, and then play this, and then boom, they get stopped out. But I'll show you, this is what I mean by the greatest trader of our time, Paul Tudor Jones. What did he say? He said he can tell a rookie trader by if he tell them he was short, they say where at. And this is where traders get into trouble at. It does not matter where I'm short at. The point is, I am short the market. When this does this and I take this trade, I am short the market. In my mind, I'm just looking at a place to get short. It could be here, it could be here, it could be here. But the minute the market breaks this level here, that's when I'm going to start thinking about, okay, it broke what? The definition of a trend. Higher, low, and this one, this is a lower low, and this is a swing. It broke that swing. So therefore, the market, when it broke this, it broke trend. It broke the pure definition of a trend. So, okay, I'm going to do another part, guys. Okay, so And I'll be right back.